Hello, thank you for tuning in to another edition of the Vulcan Report, and happy Valentine's Day to all the lovers out there. All right, let's go through some charts quickly here. The first chart that you're looking at here is a chart of the crude oil futures. As you can see, we've broken below the Kumo cloud here. We're down about 68 cents on the day, down 0.79%. Prices did close lower than they opened, with weak bids going into the close. We have 3 down candles which occurred in the last 3 trading sessions, as you see here, 1, 2, and 3. Although these candles were not big enough to create what is called 3 black crows, the steady downward pattern is bearish for crude oil. Looking at market sentiment, we have a pulse scan swing VIX reading of 35.07. The market pulse is negative since it's trading below its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of 5 periods ago. The swing VIX is now below negative 29. This is where it usually forms support. The swing VIX is usually forming support below and before the underlying security. The last signal was an overbought sell 32 periods ago. The swing VIX does not currently show any failure swings, and the securities price set a new 14-period low, while the swing VIX has not. This is a bullish divergence. Since the pulse scan leads the market 3 to 5 days out, we will wait to see if an upside breakout occurs. Since the last swing VIX signal, crude oil's price has decreased 2.95%, and has ranged from a high of 89.54 to a low of 84.58. Taking a look now over at our momentum readings. Currently, the trend is still considered up, still in an upward bias, and that bias is still intact, with prices holding above trendline support around 78.54. As far as trend strength, there's currently no trend strength reading at this time. Taking a look at our weekly price projections, we have our breakdown support at 85.11, and we have resistance at 92.84. As for volatility, we did manage to close above the lower band by 7.9%. This, combined with the steep downward trend in prices, suggests that the downward trend in prices has a good chance of continuing. However, we do notice a short-term pullback inside the bands is likely, and that would actually put us back inside the Kumo cloud. A few things I want to point out with this chart here. This right here is the trend line support, this black line right here. All right, so we could very easily head back down into the high 70s and bounce off there and still be considered bullish. So as we break below this Kumo cloud, we're going to see if we're going to get a continuance, or if the market's going to bounce from here and try to project back up into the cloud. But as you can see here, when the blue line crosses below the red line, that is a very bearish sign. As you can see, the last time that happened, it pushed prices right back down into the Kumo cloud. And then again, we're flat here. As you see, price movement just moved sideways. It didn't do anything. And then once we broke below the red line again, you see the momentum accelerating to the downside. So this is going to be a crucial area now. We've already been 1, 2, 3, 4, 5, 6 trading sessions now that we've been trading in this downtrend channel, just like before. Now 1, 2, 3, 4, 5, 6, 7 here on the prior one, so we could have one more day before we bounce back up again. As you can see, the reversals tend to be kind of powerful here. Okay, so we'll wait to see. That'll put us back around the upper 89.5 level, somewhere around there. So that's a good $5 move from where we are now. So we'll wait to see. But as for right now, we're looking at continued downward spiraling of prices right now in the crude oil, and we are starting to build a support area. But it doesn't mean that we're oversold yet. We still have a lot more downside that we can go on the crude oil. Excuse me. Okay, now switching our focus to the silver market. This is the silver futures and silver spot chart. Okay. We have a little bit of a different situation than we do with the oil here in the silver, but nonetheless, let's jump right into it. All right, on silver, we closed up about 60 cents today, up about 2%. Prices did close higher than they opened, with strong bids going into the close. This is generally considered bullish as prices close significantly higher than they open. If this type of a candle appears when prices are low, it may be the first sign of a bottom. However, if it occurs when prices are rebounding off of a support area, like we have with silver here, then this long white candle adds credibility to the support. Likewise, if the candle appears during a breakout above a resistance area, this long white candle adds credibility to that breakout as well. So we meet both conditions. And as you can see, this is the support area that we're referencing in the commentary right here. Okay. We have an engulfing bullish line, and that's where the white candle's real body completely contains the previous down candle's real body, or the black candle, and that's this candle right here. Okay. The engulfing bullish pattern is bullish during a downtrend. It then signifies that the momentum may be shifting from the bears to the bulls. Now, another thing to note about the engulfing bullish pattern is that we do have that showing here in the charts, and it may be a last engulfing top, which indicates a top too, so we have to see which way we go. The test to see if this is the case is if the next candle closes below the top of the current white candle's real body. So we need to close back above here, okay, where we closed today. Switching over to market sentiment, we do have a pulse scan swing VIX reading of 43.64. The market pulse is positive since it's trading above its zero signal line. However, the pulse scan crossed above the swing VIX, creating an uptrend channel as of 13 periods ago. The swing VIX is above 39. This is where it usually tops. The swing VIX usually forms tops and bottoms before the underlying security. The last signal was an oversold buy 13 periods ago. The securities price has set a new 14-period high while the swing VIX has not. This is a bearish divergence. Since the pulse scan leads the market 3 to 5 days out, we'll wait to see if downside pressure develops. And this goes back to what we were talking about, that engulfing bullish pattern. We need to confirm it. We need to see if we're going to break out or if the market's going to correct. We are into resistance area according to the swing VIX, which is usually when the market tops out. And you can see the last time that happened was here on January the 3rd. You see prices totally collapsed and totally corrected and got into that oversold zone on January the 25th. Okay, that same pattern could play out again, which means we could pull back and test the lower end of this Kumo cloud, which is going to be around it could be anywhere from we'll call this let's call it $27.37, okay, to be precise. That's where we could pull back to, somewhere around there. All right, somewhere in the mid to lower $27 range, which would be an equivalent $3 pullback from where we are now. Okay, all right. Taking a look now at finishing up our report on the sentiment. The last swing VIX signal, since that occurred, price has increased a whopping 10.99% and has ranged from a high of $30.72 to a low of $26.30. All right, looking at momentum now. All right, currently we do not have a trend reading for the security at this time. And as far as trend strength, it remains weak and range bound. Okay, prices have ceased trending and have become consolidated at this time. Hence, we traded here, went into the cloud, just broke out of the cloud. Still not trending yet. Okay. Looking now at our weekly price projections, we have resistance at $30.50 and support at $29.26. One of these are going to be taken out this week. In other words, we have a very high probability that prices will settle this week outside of these price projections. So we're either going to close below $29.26 or we're going to close above $30.50. It's going to be one or the other. All right, now taking a look at our monthly price projections, our 12 to 18 month price target, if we continue to trend upward, would be $46.96. Okay. Bubble phase 1 is not until $62.65. Once we hit that price, we start to enter into our bubble phase 1, which is our 24 to 36 month price target, and we do hit bubble phase at that point. You've heard me reference that in earlier videos that bubble phase territory is extremely rare. But when we do hit it, bubble phase 1 is more common than bubble phase 2. Bubble phase 2 and 3 they almost never happen. Only a couple of times in history have they happened. And when they do, prices almost immediately reverse from there. You can pretty much set your watch by it. But it's hard enough for a security to hit the 12 to 18 month price target, let alone the 24 to 36 month price target. So there you have it. Closing up silver with volatility readings, we close below the upper volatility band by 8.3%. Okay, finishing up the video now with gold. All right, we closed up about $1.90 today, up 0.14%, as prices closed higher than they opened, with strong bids going into the close. We have a pulse scan reading of 39.31. The market pulse is positive since it's trading above its zero signal line. The pulse scan crossed above the swing VIX, creating an uptrend channel as of 13 periods ago. The swing VIX is above 39. This is where it usually tops. The swing VIX usually forms tops and bottoms before the underlying security. The last signal was an oversold buy 13 periods ago. The swing VIX has just reached its highest value in the last 14 periods. This is bullish. The swing VIX has just set a new 14-period high while the securities price has not. This is a bullish divergence. Since the pulse scan leads the market 3 to 5 days out, we'll wait to see if an upside breakout occurs. Breakout will put us not only into the narrow range cloud, but actually break out above the cloud, testing the 1400 area again. Since the last swing VIX signal, gold's price has increased 1.29% and has ranged from a high of $1,369.70 an ounce to a low of $1,309.10 an ounce. Looking at momentum, we have a trend reading showing that the uptrend is still intact, with prices holding above the trend line support area, which is at 1257.39. That's this black line you see right here. Okay. As for trend strength, we do not have a reading for that at this time. Taking a look at our weekly price projections, we have resistance at 1369.70 and support at 1309.10. Just like with silver, we have a high probability of settling this week outside of the price projections, and if I had to call it now, I would say it would be to the upside, closing above 1369.70. So the gold chart is just reading just a little bit slightly different than the silver chart. Volatility says that we closed below the upper band by 26.4%. And in a final note here, you do have a nice base here in the Kumo cloud, and it's a bullish Kumo cloud, which suggests that we should have a easier time breaking through it and getting back up to the upside in the gold. So this is going to be very interesting to see if prices actually respond and collapse immediately, or do we see more upside first. So those who are long along the gold, either we're going to be forced to tighten up our stops and be stopped out and liquidate the position and reverse and go short, or we'll be able to trail it and as we move back up to the 1400 level. So be sure to stay tuned to that and check your prices on the sheet so that you can know where you should move your stops, and we'll discuss more of this in the trading room. All right, remember, take what you can and give nothing back.